Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 27th of May, 2021. And we have received some US economic data today. And we're analysing the price of gold and silver's reaction to that data. So let's take a look. Now yesterday we produced a video entitled Gold and Silver Fall Back Below $1,900 and $28. What are they waiting for? And we concluded they're waiting for economic data due out today and tomorrow before reacting either in a positive or negative fashion. You see, we saw gold yesterday peak to $1,912 and silver as high as $28.25. But yesterday gold had fallen back to $18.94 and silver to $27.70. Now at the time of writing, which is 1900 GMT plus 1, we can see that gold stands at $18.97. So just $3 higher than when we produced our video yesterday. And silver is at $27.87, some 17 cents higher than when we reported yesterday. Though silver did actually dip as low as $27.52 earlier today, but obviously has recovered. Now the spot dollar index, which really accounts for the marginal rise in both gold and silver, has fallen just below 90 again and stands at 89.95. And equity markets are moderately positive, to be fair. The Dow Jones stands at 34,421. That's up 98 points. The S&P 500 stands at 4,203, up 7 points. And the Nasdaq stands at 13,750, and that's up 12 points. UK and European markets closed broadly flat, either very marginally above or very marginally below their opening levels. Now our analysis and viewpoint on gold and silver are little changed compared with yesterday, though we do feel there may still be some further slight downward pressure on both, but they are being resilient, and the economic data to be announced tomorrow could indeed be persuasive in either direction. Looking at US data today, we can see that the initial jobless claims were down from 444,000 last week to 406,000 this week. GDP revision remained constant at 6.4% growth, but durable goods orders for April were minus 1.3% compared with a plus 1.3% in March. However, tomorrow is likely to be more eventful as we shall see figures relating to personal income, consumer spending, and core inflation. Next week will be of even greater importance simply because we have a whole range of very important PMIs, 3 employment data figures, the ADP on Wednesday, the weekly jobless on Thursday, and the all-important non-farm payrolls on Friday. Bitcoin continues to hover around the $40,000 level after falling to $30,000 last week, and we can see that platinum is down today, though palladium has risen. Politically of some note, today has been the announcement that the US Senate Republicans have unveiled a new $928 billion offer to revitalize America's roads, bridges, and broadband systems. In other words, infrastructure spending, which fell short of President Joe Biden's latest proposal, but proved substantial enough to keep the negotiations alive. The 8-year plan from a group of 6 Republicans led by Senator Shelley Moore Capito represents their counter-offer to a week-old $1.7 trillion White House proposal that removed more than $500 billion from Biden's original $2.25 trillion plan in a bid to reach a bipartisan agreement. Now, these negotiations, or the outcome of them perhaps more than the negotiations themselves, are important, especially for both equity and capital markets, and of course any future impact of US dollar values. Now, as we've done these past 2 days, because we've basically said our view on gold and silver a little changed compared with yesterday, we're ending this video with a brief reading from Bloomberg. In fact, 2 readings from Bloomberg. The first being its typical market roundup, which will consist of a few items we've not included, but what we've covered is very marginally more up to date by about 45 minutes. But we also talk about some interesting news concerning the repo market, which we will elaborate upon in a future video. So it's worth hanging on to the end just to hear that which has been reported. It's a little bit too lengthy a subject for us to cover now, because we want to try and keep our videos within 10 or 11 minutes if we can. And so we will create a new video to explain what has happened today actually potentially could mean. Meanwhile, before we close, do like our channel, subscribe and press the bell sign, and we shall now, and also of course not forget to share your thoughts and views. They are read even if they're not all answered directly. Let's now move on to Bloomberg, and then the video will end. Bloomberg article dated May 27th, 2021. Stocks climb amid renewed growth to value rotation. Markets wrap 6:03 p.m. GMT +1. Stocks climbed after strong economic reports spurred a rally in companies that stand to benefit the most from a rebound in activity. Treasuries fell while the dollar was little changed. Industrial, commodity and financial shares led gains in the S&P 500. The Russell 2000 of small caps outperformed major US equity benchmarks, while the tech-heavy Nasdaq 100 fluctuated. Equities also rose after a news report that President Joe Biden will unveil a budget that would see federal spending jump to $6 trillion in the coming fiscal year. Banks remained in focus, with the chief executive officers of the nation's largest lenders testifying again before Congress. Equities headed towards their 4th straight monthly rally as prospects for an economic rebound tempered inflation worries. Treasury Secretary Janet Yellen said she sees the burst in prices as temporary, though likely to last through the end of 2021. Data showed jobless claims dropped to a fresh pandemic low, while orders for business equipment climbed more than forecast. Pending home sales fell, but analysts highlighted buyer interest that could translate into a pickup in contract signings. We're seeing that kind of economic data underscore what we keep calling the recovery trade, a move back into cyclical and defensive stocks, companies that are poised to do better with a reopening of the economy, said Greg Busak, Chief Executive Officer at AXS Investments. Value has a much stronger path for gains going forward. The Russell 2000 has lost ground to the Nasdaq 100 this quarter, but it has valuation on its side. The forward price earnings spread between the small cap and tech-heavy gauges has narrowed to below the 5-year average. And while the Russell 2000 value growth ratio has ebbed in the latter half of May, the relative strength of value suggests the small cap stocks can continue to be big beneficiaries of the reopening recovery. We'll cover in a few moments the equities market and also the spot index, but we can see as at 6 o'clock it was up 0.1%, the euro is little changed, British pound rose 0.4%, and the Japanese yen fell 0.7%. The yield on 10-year treasuries advanced 4 basis points to 1.61%. Germany's 10-year yield advanced 3 basis points to minus 0.17%, and Britain's 10-year yield advanced 6 basis points to 0.81%. Crude rose 0.5% to $67 a barrel. That's West Texas Intermediate. End of article. Now, we weren't going to cover this today, but it is literally an article published half an hour ago at 6:25 p.m. GMT +1, and we're just throwing it in as added measure as we're talking about the Bloomberg articles published later today. And it's headed, "Dollar Glut Drives Usage of Federal Reserve Repo Facility to Record." And we may cover this on the weekend, actually. It's very short, we'll read it quickly. Demand for a key Federal Reserve facility used to control short-term rates surged to the highest on record, accommodating a barrage of cash in search of a home. 50 participants on Thursday parked some $485.3 billion at the overnight reverse repurchase facility, in which counterparties like money market funds can place cash with the central bank. The total surpassed the previous record volume of $474.6 billion from December 31st, 2015, Fed Bank of New York data show. The amount placed on Wednesday was $450 billion. Even though the offering rate on the Fed facility is 0%, demand has been increasing as a flood of cash overwhelms US dollar funding markets. That's in part a result of central bank asset purchases and drawdowns of the Treasury cash account, which is pushing reserves into the system. Recent stimulus payments to state and local governments are adding more cash to the front end, while regulatory constraints are also spurring banks to turn away deposits and direct that cash to money market funds. We'll cover the implications of this at some stage during the weekend, but it is something particularly important to notice. But this video has now run out of time, and so, as we say, we'll cover it again. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.